Welcome back to the channel, everyone. Today I want to talk about how trading in the AMC APE dividend has been suspended all day today in the German markets. I also want to talk about one specific hedge fund that's been going around buying up all of the APE synthetics. So stay tuned and let's make some money. And I want to dive straight in with the key information. So, Moonape tweeted saying just in, APE was actually suspended all day at the German etc. market. This is a screenshot of the etc. website alerting clients that trading in APE has been suspended all day today with immediate effect. Now obviously a lot of that screenshot was in German, but fortunately Django came to our rescue with an English translated version. He said, "I just found this, and as for a reason, they state it's for CCP, which is Central Counterparty Clearing." We can see from this screenshot that AMC Entertainment Holdings preference shares, aka APE shares, have been suspended due to CCP. Now, if you Google Central Counterparty Clearing, it says that it's also referred to as a central counterparty. It's a financial institution that takes on counterparty credit risk between parties to a transaction and provides clearing and settlement services for trades in foreign exchange, securities, options, and derivative contracts. Basically, it's Germany's version of the DTC or the DTCC, and it's obviously set up to facilitate trading and transactions and also provide clearing and settlement services. As Jan-Jack tweeted, he said, "Thanks Django, a counterparty could be at risk of default or has defaulted on its obligations. So the equivalent agency to the DTCC in Germany must be trying to settle the matter by giving the counterparty time to come up with the required collateral and margin. Maybe as a result of Phase 6, one of the large hedge funds dealing in APE in Germany has defaulted, and therefore the Central Counterparty Clearing Service is giving them some time to find additional cash." They've obviously halted the trading in APE all day today to give this counterparty some time to come up with the additional cash and meet their margin requirements. Now, I think this really goes to show just how much these brokers are struggling to actually clear these transactions in APE. There's so few shares going around that these brokers can't locate shares to even fulfill buy orders, let alone fulfill shorting orders. And obviously, as these brokers are struggling so much, they've had to halt trading in its entirety in Germany to give these brokers some time to locate shares and fulfill and clear their transactions. Now, on top of this, Unusual Ape has tweeted saying we've got a new 13F whale jumping in with 24.5 million AMC fakies. He said ICS, aka Millennium International Management, owned by Izzy Englander, seems like he likes to go long term. Now we can see from this screenshot here that ICS Opportunities Limited has just purchased 23.643 million shares. You may say, "Tom, did they just purchase 23.6 million shares of AMC?" And the answer is no, they actually purchased 23 million shares of APE, or the AMC Preferred Equity Units. And a Strong tweeted, he said, "How is it that a preferred share dividend that has not yet been successfully distributed to all AMC shareholders and is on the regulation SHO threshold list happened to have a spare 24 million shares end up in the hands of a Cayman Island hedge fund?" Obviously, it says here that ICS Opportunities is incorporated in the state of the Cayman Islands. And this Cayman Islands company has just purchased a whopping 23.6 million shares of AMC Preferred Equity Units. So what we've got here is a stock that is very highly illiquid. These brokers haven't even delivered all of the APE shares to AMC shareholders yet. And on top of that, APE has already landed itself on the regulation SHO threshold securities list due to a massive wave of failed delivers. But yet, during all of this mess, some small Cayman Island hedge fund has still managed to purchase a whopping 24 million shares. Guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get a whopping total of 13 free stocks, which is the largest number of shares that Moomoo has ever given away. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, they officially state they do not sell your order flow to market makers like Citadel. Therefore, Moomoo is brilliant for buying those AMC, those APE, and those GameStop shares. And Retail Stocks has tweeted saying, "I'm gonna be honest, I'm still trying to wrap my head around Englander and Millennium and how they've managed to buy 24 million shares." He said there's more questions than answers right now. There's some things that are on my mind. A thread. He said, "How did they get 24 million APE shares when they only held 5.6 million shares of AMC? From this screenshot, Millennium Management LLC only holds 5.6 million AMC shares and therefore surely only received 5.6 million APE. And he said, interestingly, Millennium has actually been in trouble before with the SEC for illegally shorting a company prior to a share dividend being issued. He asked, what are they up to? 24.5 million shares would put them in the third highest ownership spot for AMC, although we are talking about APE here. And he said if they went from 5.6 million AMC and APE shares, what the dividend should have been, to 24.5 million, why is there no separate 13F and 13G filing? The AMC filing they made was on the 24th of August, and the total volume in APE on that day was only 35.9 million shares. That'd be 19 to 20 million shares of APE they would have had to buy, or around 53% of the entire day's volume for one entity buying. So he asks, when exactly did this fund get to 24.5 million shares of APE, and what are they doing with that many APE shares? Where is the price impact, and what comes next? Which I think are all brilliant questions. If this fund only held 6 million shares of AMC and only received 6 million APE from the dividend, how did they buy 20 million shares without barely impacting the price? Now, this is the press release from the SEC of Millennium settling charges of illegal short selling in advance of stock offerings. It says the investment advisory firm Millennium Management LLC has agreed to pay more than $630,000 to settle charges that it shorted US stocks in companies planning follow-on offerings and then illegally bought shares in the follow-on offerings. So hang on a second, this fund actually got sued for shorting companies like AMC, but then buying shares and buying stock in the follow-on offering, aka buying shares in APE. It says an SEC investigation found that Millennium violated an anti-manipulation provision of the federal securities laws known as Rule 105 on 4 occasions back in 2012. Rule 105 prohibits short selling an equity security during a restricted period, generally 5 business days before a covered public offering, and then purchasing that same security through the offering. By illegally purchasing shares in the follow-on offering, Millennium reaped $286,000 in illicit profits. So effectively this Millennium fund illegally shorted the underlying stock and still benefited from the dividend. This is basically saying that Millennium may be illegally shorting around 20 million shares of AMC and received an additional 20 million shares of APE. Whether this fund is actually helping us by buying an additional 24 million shares of APE or is actually against us illegally shorting AMC, I don't know quite yet. But I do think it's very, very interesting they've somehow gained an additional 20 million shares of APE while the price has been falling drastically. I believe what this proves is that a massive number of APE synthetics likely already exists. Obviously not billions and billions of synthetics like we have with AMC, but obviously at least 25 million synthetics are out there right now. These AMC APE shares haven't even been fully distributed, and these funds are struggling massively as APE is already on the regulation SHO threshold. Obviously these funds are struggling massively, they're creating a giant amount of synthetic shares and failing to deliver on tons and tons of shares, likely with the help of market makers. But weirdly enough, ICS Opportunities seems to be buying up all of these synthetics. Whether they're benefiting from free APE shares because they're illegally shorting AMC on the other side, I don't know, but what this does help to prove is the existence of synthetic shares, as this fund can somehow magically buy or magically gain an additional 20 million APE shares. It's likely these synthetics are being created and potentially distributed or sold or given to ICS Opportunities. I just don't know why quite yet. Now, on top of this, something very interesting is that Goldman Sachs is now predicting that UK inflation may hit a whopping high of 22%. And he said a scenario that would mean pure chaos in the United Kingdom. Let that sink in. Prices are already up so significantly high in the UK and in Europe and the US as well, but there shows no sign of it slowing down. And Jonathan Farrow also tweeted from StanChart that they see interest rates being increased by 75 basis points at the next FOMC meeting. Previously, a 50 basis point hike was expected, and now it's increased to 75 basis points. And at the November meeting, they were originally expecting it to stay flat, but they're now expecting another 50 basis point hike. And they said, we think US labour data would have to slow dramatically to deter a 75 basis point policy rate hike, requiring surprises well below our lowish 0.3% month-over-month expectation for average hourly earnings and 275,000 non-farm payroll growth. Basically saying they expect another large interest rate hike at the next FOMC meeting, which would again push the stock market down even further. Obviously, if rates continue increasing at such a dramatic rate, the S&P 500 will continue falling and the market crash will continue happening. Obviously, this market crash is good for AMC and APE because obviously as the market continues crashing, more and more hedge funds will be liquidated. These hedge funds will be liquidated and forced to sell off their long positions in the overall market and forced to cover their shorts in AMC, APE and GameStop. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.